JBlog, 14th of June 2009. Today we'll start out with a 5-minute chart on the S&P 500. It's a 2-day chart just to see what happened on Friday. So on Thursday, this is just the tail end of Thursday, the market dropped off right here. On Friday it went pretty well sideways except for the last 5 minutes, where we had a spike here and there was actually another spike over there just at the end of the day, which pushed us up high. Most of the day was actually spent somewhere around 941 and even lower. So a little bit of good news was published at the end of the day, but most of the day was actually down. For me, once again, the market tried to push higher, tried to achieve new highs, and it's just running out of steam. I know I have starting to sound like a broken record here, but I still believe that this market is in trouble. I myself do not feel comfortable being long in this market, so right now I've taken on quite a few short positions myself to guard myself against what I believe to be another correction coming up. I'm short oil, I'm short Goldman Sachs, and I'm short the financials in general. And for those long positions that I have in Vail and STLD, as well as Agrium, I have offsetting call options sold against them to have those options basically expire worthlessly by the time, or buy them back at a lower price to offset some of the losses that I will incur. So I'm sort of just hedging right now. I don't know when this correction will come. I thought it was last week, then I thought it was this week. It might be next week, hoping. But I'm just not comfortable holding anything long right now in a market that I believe is overbought. So looking once again at the S&P 500 on let's look at the 3-month chart. Look in 3-month chart. Basically for the last 2 weeks we've been going sideways. There have been several breakout attempts right here, but there is certainly not any new highs being made on a close. And as I said before, this little high that happened right here, this hammer, is just happened in the last 5 minutes, and therefore I'm personally just going to ignore it. Stochastics are showing as oversold since the beginning of June, so once again it doesn't give me the warm and fuzzies. DTO. I'm actually short oil right now via the DTO. In my opinion, again, oil has gone up very fast. The economics really do not justify it being this high at currently I believe it's at 72. Let's look at the actual oil continuous contract chart. It closed at almost 74 on Thursday, and on Friday had a tiny down day, and I'm looking at this run and we made it from 35 till 74 in 6 months basically. In my opinion, that's is screaming for a pullback, so I am short oil right now using DTO. Again, it's a small position. Right now I'm not sure enough of myself to take any long positions, but I don't mind taking small short positions or buying small amounts of inverse ETFs to achieve the same result as a short. Looking at Goldman Sachs, I see some weakness here. It has definitely fallen below the trend line here, and this trend line, let's see how far this trend line goes back. This trend line goes back here until the 16th is when I started drawing, at the 16th of March. And there is a 1 touch, a 2 touch, a 3 touch, 4, 5, perhaps 6 in there, and there's a violation of the trend line at the end. It could of course drop to the lower trend line right here. Right now what I have here is I've got an automatic cover at 120, and I went into the short at 140. So that's going to be just a trade, not a big deal, just a trade. I might lower that at some point. I'll have to evaluate when we get there. Other things I was just looking at are the VIX. For those of you who are not familiar with the VIX is the volatility indicator, and it basically shows the spread between that exists in the option market, and it's an indication of how uncertain the market is right now. When the VIX drops, then the market becomes very certain. Now, as you can see, the VIX has been dropping steadily, is now down in the 25-26 area, so the market has become quite content, and whenever the market gets content and risk, people take on too much risk, that's when things can go sour. So that's another thing you want to look at. Also, the VIX is very important for option buyers. On option sellers is something I'll talk about in a future video. I'll come up with a how-to section, and I'll talk about options, buying and selling of options. Of course, the stochastics on the S&P 500 has not yet rolled over. It's still very high, but one thing once again that I see, this is the OBV, on balance volume, of the New York composite, and it is starting to show lower highs. So even though the market itself is going sideways, some of the technical indicators are indicating that the thrust is not as powerful anymore as it used to be. This market can run out of steam, in my opinion, at any point. Again, SKF, one of my holdings, because this phenomenal fall here is basically screaming for a rebound, just because that's what stocks do, is they try to go back to the mean. What else do we have? We have Apple, still a very strong stock. It's showing no particular weakness on the weekly chart yet. On the daily chart, on the other hand, it is starting to show the RSI was getting into overbought territory, and then it did drop off and has been dropping off for about a week. Overbought. The MACD is rolling over, and actually is a crossover. The stochastic is starting to drop below 80 on the daily chart, so that sort of indicates some trouble on the horizon. Agrium had a big dip here, had a rise again. I wouldn't mind it staying below 50. I have an option sold at 50, and I wouldn't mind that expiring worthlessly. Of course, I don't want it to drop too far, but that will expire next Friday. So let's see what happens there. Again, OBV on Agrium is starting to run a little bit out of steam here. So overall, the market is just getting a little bit tired. It's been running for a very long time, 6 months, 4 months. I mean, since February, March, it's been running on a 39% rebound. That's a lot, and I'm still of the opinion that this is not going to go to a new low. I just believe that the market needs to pull back here and have a healthy pullback, and then perhaps establish a head and shoulders formation.